Hello everybody, welcome to day 4 of the Simple Trade Profits free training course. If you guys haven't watched the first 3 videos, then I highly recommend that you go back and watch those, because this video is really you're gonna see at the end of this video how it's gonna build on the previous 3 videos that I've done. So go back and watch those first. If you watch them and you weren't really paying attention, then go back and really pay attention, because this is going to build on it. And what we're starting to do now when we get into this video is we're starting to build a trading strategy that you guys can implement and use in your own trading. So today's video is going to be the first video that we talk about an actual indicator. So the first 3 videos we've talked about just drawing trend lines, drawing support and resistance, looking at candlestick patterns. But now we're going to actually add an indicator to our chart to help us spot potential profitable trades. So today's video is about RSI, Relative Strength Index. And I'm going to show you 2 ways to use this. The first way is going to be the traditional way that it's understood. Then I'm going to show you how we're going to use this coupled with our first 3 videos, the strategies in that. And then I'm going to share with you the most powerful way to use this and how I use this. A less common, a more rare thing that happens with RSI, but when it does, it's more reliable. So what is RSI? RSI, Relative Strength Index, is a momentum oscillator. It's basically a indicator that kind of gives us a temperature of the market. It kind of helps us identify momentum, which direction it's going, when it's running out of momentum, running out of steam, and things like that. It is calculated, and I'm going to show you pictures of it, and we're going to go to the chart and look, but first, just to understand it, it's calculated by taking the average number of green candles divided by the average number of red candles over a specified time period. And it ends up being a line down at the bottom of your chart that is moving up and down as the market moves up and down. But just to understand, it's calculated by taking the green candles and dividing them by the red candles, and it plots a line on the chart that at the bottom of your chart that moves with the market. So it's really helpful. And like I said, it's used to take the temperature of the market, give us an idea of which direction things could be headed. So how to read RSI? RSI is, if you look over here in the bottom right, we have, when you plot it on your chart, yours might be blue or purple or something. I changed mine to orange, so a little more contrast so I can see it. So we can see this is our RSI line that's moving up and down with the market. It always stays between a value. The very bottom is 0, the top is 100, so it's always between 0 and 100. These dotted lines across here, the top one is, excuse me, the top one is 70% or 70. The bottom one is 30. And then up above 70 would be 100. Below 30 would be 0. If the line is above or below 30, it is considered to be oversold. This is the traditional way of understanding it. And if it's over 70, it's considered to be overbought. What does that mean? Overbought, oversold. That means if your RSI line is over 70, then it means that and it's in an uptrend. It's over 70, so it's in an uptrend. That means that it may be running out of steam. It's getting into an overbought territory, and we could possibly see a reversal. And vice versa with it being under 30. If it's in a downtrend, it's under 30. It could indicate to us that it's running out of steam, sellers are getting weak, and it could reverse back up. So we can see, like, as it got down right here, as it got down under 30, it moved up quickly. Once it got over 70, it moved down. Here it was under 30 as well. So let's head over to the chart. I'm going to show you this in real time and show you what I mean. All right, so here we are on BTC, USD, Bitcoin chart. I already have RSI plotted down here, but if you don't have it, just click on this little FX button. It's the indicators button. And then just, you can scroll down and look. They're not in alphabetical order. Just start typing RSI and it'll pop right up there, Relative Strength Index. Click that and you'll have it down here at the bottom. So, like I said, the traditional way is over 70 considered overbought, under 30 considered oversold. So we can see, like right here, for example, it was over 70 and afterwards it continued down. Right here, for example, it was under 30, moved back up. Right here, it was over 70 and then and then moved back down. So it's not perfect. It's not going to work. You can't use this. I mean, you could, but you wouldn't be profitable doing so. You don't want to use this indicator alone by itself. What we're going to do, and what I'm going to show you how to do, is incorporate this in with our trend lines, our support and resistance, and our candlestick patterns that we've learned already. But just to give you guys an idea of what it means when it's above these lines or below these lines, is a reversal is possible. So I have some trend lines that I've already plotted on here. I'm not going to walk through showing you how to do that because we've already done that. So I've drawn some trend lines here. I've drawn a couple right here, and I've plotted a few support and resistance areas. So these squares I got here are areas that I want to focus on. So if you've watched the first videos, you can see we already have our trend lines, our area of value, because remember, this is a zone, this is a range. This trend line is they call it like a dynamic resistance line or diagonal or whatever, but it's not a fixed price. It is an area. So in between these two lines would be a resistance area. And then my yellow lines here in the background, I'll make them a little bit darker for you, are my support and resistance lines. So we know these areas, both the white trend lines and the yellow support and resistance lines, are areas to keep an eye on when price gets to this area. So let's zoom in here and look at what took place in this area, because we would have already had these trend lines drawn, because remember, we were looking for the swing, the two swing points, major swings. We have 1, 2, 3. I didn't draw it all the way up there to the top. It doesn't matter. But we would have already had these trend lines drawn when this was happening. So let's look in here and so I can explain to you what I'm talking about. So look at our RSI down here. We are in what they call an overbought territory. You don't want to use this by itself, but we also would have our trend lines drawn. So we have one indication of a reversal possibly happening. We have our resistance line drawn right here, a second indication of a reversal possibly happening. And now we're adding in this RSI, also showing us that price is considered overbought and a reversal is likely. So now we have three things in our strategy that show us, we can even check off, look at the wick on this candle. Look how long this wick is. Now we have four things telling us, like, hey, price could probably head down from here. We have our horizontal support or resistance. We have our diagonal resistance. We have a long wick candle, and we're overbought. Man, maybe I want to short this market. And had we done that, look at how price, we were up in the 9,700 range, and it continued all the way down to 6,500. That would have been a very, very profitable trade. So there's one example. Let's look at another one here. This one, and I'll zoom out. Actually, let me zoom out first so I can show you this trend line here. So we have this trend line price is heading down. And what makes this even better is that, they say the trend is your friend. You don't want to go against the trend. So not only do we have these indications that price could reverse, but we'd be shorting. And the market is in a downtrend at this point. It's coming down. So we're looking for shorts. Great opportunity to put a short in with our RSI, our diagonal resistance, our horizontal resistance, and a long wick candle. So we're looking for shorts in this area because we want to go with the trend. We don't want to trade against the trend. That never, works out very well. So in this example, we have, again, and remember, these are areas. These are not exact prices that are resistance or support. So even though price did not come up here and hit this exactly, we know that this area, this whole range right here is an area of resistance, or if it was on the other side, an area of support. So we know for down here, price is nearing our horizontal resistance. It's nearing our diagonal trend line, which is acting as resistance. And once again, the RSI is showing us that we are overbought. So at this point, we could place a short and go from 7,000, almost 600. We could have closed it down here at $7,050. So there's a $600 swing, or came back up, touched it again, held it all the way down to here, down to 6,800. So we can see another good example of using. This one didn't have as much of a long wick. It's still kind of long, but not like that first one we've seen. So again, we're using the three things that we've already learned and adding the RSI into it to increase the probability, increase the likelihood that we will have a profitable trade. So I believe this is the last example. Yes, this is the last example of so here we have, again, RSI showing barely overbought, but it still is. It came up, it is overbought. We have our diagonal trend line acting as resistance. We have our horizontal resistance that we have drawn because of all these areas back in the past. So we already know that this is resistance. We have our resistance, we have our trend line, we have RSI again showing us overbought, and we go from 9,142 all the way down to 8,450. Major swing. Would have been a great trade to take. So this is something you guys can incorporate into your strategy and really increase, like I said, increase the likelihood that your trades will be profitable. Don't use this indicator by itself. I'm sure as soon as you put it on your chart, you're going to go back and look and see, several examples of when it came up, it dropped down, or if it was below, it came back up. And it does a lot, but it's not always perfect. So we want to add this into the things that we've already learned to increase our chances and increase our profits. But now I'm going to go to the best way to use this. Like I said, it's less common, but it's much more reliable. How to use RSI. And this is called RSI Divergence, or just Divergence. So we can find divergence on the RSI indicator. There's other indicators you can find this taking place on, maybe MACD or some other ones, stochastic, I think it's what it's called, stochastic. But we're talking about RSI, so I'm going to show you how to find divergence and explain to you what it is. Divergence is essentially a disagreement between the indicator and price. So it means that prices may be moving up, but our indicator is moving down. That is called divergence. Price and the indicator are diverging. They're going in opposite directions. Divergence in an uptrend, so when price is moving up, divergence in an uptrend occurs when price makes a higher high, but the indicator does not. And the opposite, divergence in a downtrend occurs when price makes a lower low, but the indicator does not. So on this next slide, I've got a picture, and you guys can, pause the video, take a picture of this, save it. It's something I refer to sometimes when I need to, but it shows us all the different types of divergence, and so you can refer back to this. So we have bullish divergence and we have bearish divergence. The top right here, you can see price written. The top is the price line right here. And this one for the bearish, these top ones are the price. The bottom one is the indicator, okay? So assume this is, oh, not my eraser. Assume this is the current price of Bitcoin. It went up, down, came back up, went down lower, came back up, it's going down lower. So we can see it made a low here and it made another lower low there. But our RSI looks like this. It came up rather than going down. That is bullish divergence. That is a sign that the market will reverse from this downtrend and go up. I really look for strong divergence and hidden divergence the most. I don't really trade on weak or medium divergence, but just for informational purposes, medium is price is essentially like making a double bottom, coming down to the same price twice, and the RSI is moving up. Weak would be price moving low as in our strong, but the indicator has an equal low. Like I said, I don't really trade these, but if you see strong divergent, and I'm going to show you some examples on the chart, this is something I would definitely trade, especially if we have it coupled with a trend line or in a support and resistance area. I would definitely take a trade on strong divergence. Hidden divergence. So divergence means, in this example, bullish, price is coming down, RSI is going up. This means that we could see a reversal and price begin to move up with the RSI. Hidden divergence, on the other hand, so let's assume this is price. So this is an uptrend, it's moving up, but the indicator is moving down. What that means, hidden divergence, is called continuation. So price is moving up. Let's erase some stuff off here so we're not so cluttered. So price is moving up. Our indicator is moving down. That means that this hidden divergence indicates that price should continue to move up even higher. So hidden divergence is continuation of the trend. The trend is up in this example. So if we see the RSI going down when price is actually going up, that is a good sign that we're going to continue going even higher. Okay? And just reverse that. Opposite is true for bearish. So for bearish, we have price moving up. So we're in an uptrend, but the RSI is moving down. That means we should see a reversal of this uptrend to a downtrend. I'm going to skip over the medium and weak. Hidden is price is moving down, but RSI is moving up. That means we should continue to see price moving down to a lower, and lower price. For if we were shorting and we see hidden bearish divergence, then we would feel comfortable knowing that price will probably continue moving down farther. So let's go over to the chart and I'm going to show you some examples of this. All right, so let's zoom in here to my first example. The green, I colored this green because green is just a bullish kind of color for me. So this is an example of bullish divergence. So look at how we have price moving down. Price is moving down, but our indicator is moving up. And look at what happened after this. We moved up. We went from 5,800 up to 6,600, almost $1,000 swing because of this bullish divergence. So bullish, what we talk about bullish and bearish. Bullish means price going up, but bullish divergence happens when we're actually in a downtrend. So this was a small downtrend, but our RSI showed a higher low. So we had a lower low in price. We had a low here. We had another low here. We had another low here. But our RSI had a low here. Then we had a higher low. And then we had a higher low. So it showed price. It showed an uptrend on it. But our price was actually in a downtrend. And then we reverse to the upside. So there's an example of bullish divergence, and I'm going to show you some more because I really want you guys to get this. This is like really big. I use this a lot. It doesn't happen as often, but when it does, they're really profitable trades. So that one was what, 1,000, almost from 5,800 to 6,600, almost 1,000 point swing. Look at this one. So we had a higher high, we had a high, and then we had a higher high. But our RSI had a lower high. It had a high up here, and then it had a lower one right here. And look at what happened to price. Complete reverse. This is called bearish divergence right here. Perfect example. And we went from, got up to 10,000. So 10,000 all the way down to 8,500, below 9,000. It's over 1,000 point swing. And it was, I strongly believe it was caused because of this bearish divergence. People see this on their chart. They see it happening. They know it's going to send price down. They all start selling and they just essentially create it, drive the price straight down. So textbook example of bearish divergence. Here's another example, bullish divergence. We have lower highs or lower lows on price, low, and then we went even lower, and then we went even lower. RSI was doing the opposite. It was moving up. And look at what price did. It went from here and then swung all the way up. We went from 9,500 up to over 10,000. 1,000 point swing. Or no, about 700 point swing. So again, bullish divergence. Another example of bearish divergence. We had a higher high on price, high, but the RSI made a lower high, price reverses to the downside because of this. This is exactly why this happened. Price moved down because of this. So when you can spot these, they're very good to trade because this one we went from 10,200 down to 9,700. I mean, that's a $500 swing. That's a very good trade. So divergence, very important. All professional traders use it. And it's something you guys should use too. So that's it for today's training, but I am going to go to the current Bitcoin chart, and I'm going to show you my chart that I'm actually using and just talk about it a little bit. I'm not going to redraw a whole new chart. I'll just talk about what I have. It might look a little cluttered at first, but we'll talk about it. So let's go to the 4 hour. This is what I see. I see two different things happening right here. This is what they call a rising wedge. So you can see the lows are moving up, the highs are also moving up, but they're wedging. We're getting wedged in here. Rising wedges tend to break to the downside. Falling wedges, if this was inverse, and I will inverse it, if we were in a falling wedge, they tend to reverse to the upside. But right now we are in a rising wedge, so they're opposite. So a rising wedge typically breaks down. A falling wedge typically breaks up. So this is on the 4 hour. I see a rising wedge forming. But what I'm keeping my eye on is, and I have another trend line here that I want to take off. If I go to the daily chart, so the rising wedges typically break down, so that's a bearish sign. But on the daily chart, it looks like an ascending triangle. And if you remember from the first video, I think it was the first video I did, ascending triangles typically break up to the upside. So I'm seeing two different signs here, two different patterns forming. So I'm really trying to play it safe and waiting to see which one of these is going to is going to be the right one. So the other thing I have here that I want to show you is, like I said, this is the 4-hour chart. I'm going to show you some other lines. I took them off because it looks really cluttered. I can understand it, but for you it might be a little cluttered. Is this. This is called a, what is it called? A Fibonacci channel. So remember how I was copying and pasting our trend lines? This one kind of does it by itself. We have our lows going through, we have our highs coming down, and it draws these other ones in the middle. And if you look at what happened throughout the past, look at how price reacted to these lines. You know, it reacted here, it bounced off this one, it bounced off this one, it bounced in around in between these ones for a while, it bounced off here, kind of used this one as support. This one, these two acted as support and resistance here. You can see that it bounced off there, came back down, bounced up there, came back down, and so forth. And even more recently, we can see that it bounced off this one here and came up. This one's almost been acting as resistance, keeping it from breaking through. It came through and bounced off here. But what I really want you to look in on, these horizontal yellow lines, these are my support lines. I kind of make them a little bit transparent, and you can do that. So like, I don't want them real bright like this Fibonacci channel coming down. So if you notice, my yellow lines are a little bit more dim. You can't really see them. If you click on a line that you've drawn and you click on the collar right here, you can change the sliding bar right here will change the transparency. So I move it down a little bit so it's not looking like that. I want my candles to pop out more than my lines on my chart. So I don't know where I had it at, whatever, right there. So this is what I see here. Let's focus in on this area and this area. I'm going to draw a couple rectangles just real quick. What took place here and this area here. So if we look right here, we have our Fibonacci channel coming down, acting as support. We have my white trend line coming up. Let's delete these. These are just a little bit too much. So my white trend line coming up, and right here they kind of form an X. Do you see that? This line coming down, my white line coming up, we got like an X right here. And then if you see, I'll make it a little bit brighter, my horizontal trend line. So all three of these converged on the same area, and they all formed a big X. And look at what price did when it came to it. It was rejected strongly, went back up. So not only do I have my yellow horizontal support, I have my sloping trend line, and I have my Fibonacci channel indicating that price could possibly be supported here. Well, look at what's happening right here. I have my trend line, I have my yellow horizontal support, and we have the Fibonacci channel coming down as well. 3 indications that price could be supported here. So this is an area I'm watching to see, and this is about the 6,500 area to see if price is supported here. If it is, then we could bounce back up to the top of this channel. Or, like I said, since we're in a falling wedge, we could very well just break straight to the downside. So that's what I'm watching. I'm waiting to see what happens when we get to this area before I place any trades. So that's day 4 of the Simple Trade Profit System free training. Thanks for watching, and I will see you guys in the next video.